All right, today we are diving deep into the 2025 annual reports for three absolute giants in the connectivity world. Now, you probably don't know their names off the top of your head, but their components, well, they're the essential unsung heroes powering literally everything from the AI servers in the cloud to the car in your driveway. So let's see how they really stack up.
Every single time you use an AI chatbot, or drive an electric car, or heck, even just turn on your lights, you are tapping into this incredibly intricate web of connectors and sensors. These little things are the real heroes. They're the hidden nervous system of all modern technology. And, as you're about to see, the companies that make them are smack in the middle of a gold rush, and each one has a very different strategy for winning it all. So, we're putting three of these champions right under the microscope. And what's fascinating is that each one has a radically different game plan for dominating the future. The big question is, which formula is actually built to last? Is it going to be the aggressive deal maker, the super stable juggernaut, or the hyper-focused specialist? Let's find out.
Okay, so let's meet our three main contenders. Now, each one is a giant in its own right, but believe me, they are all playing a very, very different game.
First up is Amphenol. The best way to think of them, they're the shark of the industry. Their strategy is simple and it is relentless. Grow by buying other companies. In 2025 alone, they spent nearly $4 billion on 5 companies. And they didn't slow down. They kicked off 2026 by closing a massive $10.5 billion deal. Their goal couldn't be clearer. They want to buy their way to the top. Now in the other corner, you've got TE Connectivity. This is the industrial powerhouse. These guys dominate the automotive and transportation sectors, making the tough, super reliable components that have to work in the absolute harshest conditions. So instead of rapid-fire acquisitions, their game is all about massive scale, operational excellence, and, honestly, incredible financial discipline.
And our third contender is KET, which stands for Korea Electric Terminal. They are the textbook definition of a focused specialist. They are deeply, deeply embedded with Korean titans like Hyundai, Kia, and Samsung. KET has carved out this incredibly powerful niche for itself. They don't try to be everything to everyone. Instead, they aim to be the absolute best in their specific, high-tech domain.
Okay, now let's get to the biggest story of 2025, the absolute explosion in artificial intelligence. This one trend just completely reshaped the entire battlefield. So, who cashed in?
So, what's really fascinating about these numbers isn't just the size, it's the sheer scale of Amphenol's growth. They posted an incredible $231 billion in revenue. That was fueled by a remarkable 52% jump year over year. Folks, this wasn't just growth, it was a full-on explosion, and almost all of it was powered by the insane demand from AI data centers. And this right here shows you exactly where that explosion came from. Look at that. Their IT Datacom division, the part that sells high-speed connectors for AI servers, now makes up 36% of their entire business. In fact, that one single division accounted for nearly half of the company's total revenue growth for the whole year. It's their undisputed engine room, no question.
But don't you dare count TE Connectivity out of this AI race. While they might be smaller in absolute dollar terms, their focused digital data networks division grew organically by a massive 72.6%. So what this shows us is that while Amphenol basically bought its way into the AI party, TE is building an incredibly potent and efficient AI business from the ground up.
So yeah, Amphenol won the growth race, but that kind of explosive growth often comes with some pretty significant risks. Let's take a look at how these companies are balancing their big ambitions with the actual quality of their profits.
Okay, time for a quick flash analysis. We're going to break down a really crucial but often overlooked metric that reveals just how real a company's profits truly are.
We are talking about the net cash ratio. Now, it sounds a little technical, but put simply, it's just the operating cash flow divided by the net income. Think of it as let's call it the gold content of a company's earnings. A ratio over 1, that's good. A ratio over 2, that is exceptional. It means your profits are backed up by cold, hard cash.
And right here, this is the crucial point. TE Connectivity is the undisputed champion of profit quality with a stellar ratio of 2.25. Let that sink in. For every single dollar of profit they reported, they generated $2.25 in actual cash. Now, Amphenol's ratio is solid, don't get me wrong, it's 1.26. but it's lower because a lot of their cash is tied up in receivables from that AI boom, and of course, from their aggressive acquisitions.
So this brings us to the risks. For Amphenol, the gamble is that $10.5 billion in goodwill sitting on its balance sheet. That's essentially what they paid for companies above their book value. If those deals don't pay off, that goodwill could get written down, and that would really hurt their profits. For TE, the burden is totally different. It's a surprisingly high 42.5% effective tax rate, which is a really significant drain on their otherwise fantastic cash flow.
So how does all this set things up for 2026? Well, to get a little glimpse into the future, we can look at one of the best forward-looking indicators in the business, the order book.
We're looking at what's called the book-to-bill ratio. It's a simple calculation. New orders you've booked divided by the products you've shipped and billed. Any number over 1 means the company is bringing in new orders faster than it's fulfilling them, which, well, that signals very strong demand for the year ahead.
And the data here is crystal clear. Amphenol is heading into 2026 with the most powerful momentum, boasting a book-to-bill ratio of 1.12. Get this, their order backlog grew by an incredible 46% in just 1 year. TE is stable, right at 1.01, while KET, they're facing some headwinds in the North American EV market, so their ratio is below 1, indicating they've got a tougher road ahead.
So here's how we'd break down the final scorecard. You've got Amphenol, with its aggressive momentum, just riding that massive AI wave, with the strategy of high-speed acquisition. Then there's T Connectivity, offering fortress-like financial stability and quiet, super-efficient growth. And finally, KET remains a true master of its domain, with just unparalleled dominance in its chosen niche.
You know, we've really just scratched the surface here. For the full deep dive analysis and all the underlying data, you can find the complete report over at HDIN Research.
Which really brings us to the final question. In a world that is being fundamentally rewired by AI and electric vehicles, which strategy do you think is the smarter bet? The aggressive acquirer banking on momentum, or the stable giant that's built for the long haul? The answer to that is going to define the next decade of technology.